Good afternoon, everybody. It's a beautiful day out here. And I thought I'd talk about why I believe cash flow, or focusing on cash flow, is a lot better than focusing on growth or capital appreciation. Now, for those of you guys who don't know, I actually have two different channels. I have this one where I talk about dividends, options, how to earn cash flow. And as I talk about these things, remember that when it comes to generating cash flow against your portfolio, each dividend stock that you invest in, each options trade that you're able to do, whether it be a cash secured put or a covered call, each rental property that you invest in, each REIT for that matter that you invest in, is getting you one step closer to financial freedom. Now, when it comes to growth, you could argue the same is true. Well, the larger my portfolio grows, if I'm able to get a 5X on a stock or a 10X or whatever the type of outsized return you're seeking is, if you invest in the right companies over the long term, even though you can get those types of returns, you're taking a lot more risk in the process. And so what I've struggled with since I'm a risk taker naturally is transitioning from the mindset of, growth at all costs versus, how can I earn an income that's sustainable, even if it's only $100 a month starting out. And think of it more like a pension than anything. You want to build a portfolio for the sake of income. You want to build a portfolio for the sake of a pension later on in life. That's really what you're doing. Even though you're saving it yourself, pensions still have to be invested by an investment manager. And so the question is, how is it being invested and what is it being invested into? And so it really is a mindset shift, because you can focus on growth at all costs. You can focus on getting those outsized returns. But what happens if, you have a huge setback? And I've had this happen, What happens if you're focused on growth at all costs, but that growth comes with a major setback in terms of, losing on a trade or losing on an investment that you think, should have done well, but it turns out that the investment that you made didn't turn out as you expected. So now your portfolio is going down in value, even though you are anticipating a higher rate of return due to the risk you're taking. Now, when it comes to cash flow, it's really quite simple. Yes, there's going to be risk in terms of your principal, in terms of ensuring that you are not only getting cash flow, but you're also growing or at least maintaining your principal balance. There's going to be that risk. But the risk is often substantially less, because when you invest for cash flow, when you invest for dividends, if you're investing in real estate, whatever it is, if you're doing options trading, such as cash secured puts, covered calls, the wheel strategy, even if you're investing in bonds, the risk is going to be a lot less. It just is overall. And the volatility is going to be a lot less. There's just going to be less overall beta associated with your portfolio, to where there's more stability. And you don't have to worry about all the rapid fluctuations, because even if there is a fluctuation, you're probably investing in a dividend stock, for example, that's well established. It's a company that has been around for a long time. It's likely going to be around for quite a while longer, and they're already paying those dividends. And so since they're already paying those dividends, chances are they're going to be able to continue to pay those dividends and maybe even raise those dividends over time. So, and that's just an example of a dividend stock and why a dividend stock might be a better choice than, let's say, a growth stock. So what do you guys think of this? For you guys who are 25 out there, 30 years old, maybe you're just really starting to get into investing. Maybe you've been investing since you're 20. But let me know what you guys think. What are you guys taking seriously? What are you guys investing in? Are you guys more focused on growth? I assume if you're subscribed to my channel, you might be more focused on dividends and cash flow, because that's what we talk about primarily on the channel. But like I said, I've had another channel for a while that's specifically focused on growth and focused on, how to generate those outsized returns. But I created this channel because I thought it'd be better to talk about some of the things that a lot of financial advisors and stuff, they talk about this stuff, but they might talk about like the 4% rule. And a lot of other financial advisors may only talk about, the best stocks out there for growth. They might be specifically targeting, younger investors and stuff. So there are those financial advisors who specifically focus on retirement and stuff. So I'm not your financial advisor, keep in mind. I have a finance degree. I've worked in the industry previously, but I'm not your financial advisor, so please do your own research. But with that being said, what are you guys investing in? Let me know what you think in the comments down below. I think one of the major reasons, just to recap, why cash flow can be better than growth, can be better than, investing for rapid share price growth and the growth of the portfolio is, one, because of the lower risk, two, more stability, three, more predictability. So all of those things, less volatility, more stability, more predictability in terms of your income, what you actually can get in terms of a rate of return. And then when you get older and you're wanting to retire, you'll have a cash flow stream to fall back on. Maybe it's not the full amount that you're seeking. Maybe there's other ways you can earn income in retirement besides working a full-time job. But hopefully you're at the point where you're earning, let's say, a couple thousand a month or the equivalent of that in the future, where you built up an income stream that even with inflation, you can generate the income and then reinvest some if you need to, So these are all things to consider. But like I said, with cash flow, there's a variety of ways to do it. That's the beauty of it. You can do dividends, you can do options, you can do real estate, you can do a lot of things. With growth, the stock market is going to be the number one thing, when it comes to growing one's portfolio, because everybody wants to choose that next hot stock. So, but I feel like with cash flow, you have more options. You do. And, you can fix and flip on real estate, but that's going to be very capital intensive if you want to seek growth. But you could also invest in REITs, real estate investment trust, if you don't want to actually buy physical property. So REITs are good for growth and income, but primarily income because of the way they're taxed. So anyway, these are just some of my thoughts. You have like the dividend aristocrats. You have the high quality companies that have been around for so long that have not only paid those dividends consistently, but have also raised those dividends. And, when it comes to that, it's just really something to look forward to as an investor. Like, hey, my dividends are going up in value. I'm getting that rate of return that I want based upon the cash flow, not just from the share price going up, but the fact that my dividends went from 10 cents a quarter to 15 cents a quarter, over the course of a couple of years or whatever it is. So anyway, guys, let me know what you think in the comments down below. Do you prefer cash flow? Do you prefer investing for, dividends, income, a pension almost in the future and retirement? Or do you prefer to invest in growth? And if you're investing for growth, do you eventually plan to switch over to cash flow in the future? Let me know what you guys think in the comments down below. I'd love to hear your thoughts. Thanks so much for tuning in, and we will see you all in the next one. Take care.